Welcome. You know, the world of investing is always changing, and new instruments are popping up all the time. Today, we're going to break down a really interesting new development in the Indian market that's got a lot of experienced investors talking. So let's just get right to it. This is the big question on everyone's mind. With these new specialized investment funds, or SIFs, showing up, are we looking at the next big thing in investing? Or is it just another option for a select few? Well, let's find out. Before we can really get into what's new and exciting, we've got to make sure we're all on the same page about the basics. So let's start with a quick refresher on the absolute cornerstone of investing for most people, the mutual fund.
So why are mutual funds so popular? Well, there's a good reason for it. They're regulated by SEBI, and they work by pooling money from lots of different people to build one big, diversified portfolio. The whole structure is designed to be simple and straightforward, making it a really accessible way for the average person in India to get into the market.
So who's this really for? Well, it's perfect for anyone just starting their financial journey, for people who are in it for the long haul using those popular systematic investment plans, or SIPs, and really for anyone who's looking for a steadier, more conservative approach to risk. Okay, so we've covered the classic. Now let's talk about the newcomer that's shaking things up a bit, the specialized investment fund, and see exactly how it fits into the picture. Okay, if there's one word you need to remember here, it's flexibility. A CFIC is also a pooled investment, but it's built to be way more agile, way more complex. It basically gives the fund manager a much longer leash to try out different strategies and take on more risk, which, as you can guess, is meant for a very different kind of investor. And that really tells you who SIFs are designed for. Look, this is not a one-size-fits-all kind of product. It's specifically built for those seasoned investors who really get the complex stuff and are comfortable taking on higher risk because they're chasing potentially higher returns. All right, I think the best way to really get a handle on this is to just put them head to head. Let's look at the most important factors and see how they stack up against each other. So on one hand, you've got the established standard, the good old diversified mutual fund. And on the other, you've got this flexible challenger, the advanced SIF, which is all about a new level of strategic freedom. This table really lays it all out, doesn't it? Now you'll notice both are regulated by SEBI, but that's kind of where the similarities stop. The real game changer is this strategy row. A mutual fund is almost always long only, which is just a fancy way of saying it buys things hoping the price goes up. A SIF, on the other hand, can get into much more complex strategies, like using derivatives or even short selling, which is betting that a price will go down. It's that freedom that creates the potential for higher returns, but it absolutely comes with more complexity and, you guessed it, more risk. So, all of this brings us right back to that big question we started with. Looking at how different these two are, is the SIF really going to be the future of investing for everybody? So are SIFs going to replace mutual funds? Well, in finance, it's almost never a simple yes or no answer. It's more complicated than that. So let's look at both sides of the coin to get a really balanced view. There's a really strong case to be made for SIFs being a big part of the future. For one, Indian investors are just getting smarter and more sophisticated. The number of high net worth folks is growing, and with that comes a demand for more advanced products, something beyond the traditional stuff. We're basically seeing a trend that's already played out in other global markets. But hold on a second. That doesn't mean you should write off mutual funds. Not at all. In fact, they aren't going anywhere. Their simplicity, their predictability, and the way they fit so perfectly with India's massive SIP culture means they're always going to be the fundamental building block for most everyday investors. Okay, so we've gone through a lot of information. What's the bottom line? What's the one thing you, the investor, should really take away from all this? I think this quote really hits the nail on the head. It's not about one replacing the other. It's about evolution. It's about having more choices. The market is just getting bigger and offering the right tool for the right job, and most importantly, for the right investor. And, of course, we always have to end with this reminder. Think of this as your educational starting point. But when it comes to your own money, the world of investing is complicated. So please always make sure you talk to a qualified financial advisor to get advice that's tailored just for you.